Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through, I'm going to talk about the big trends. The big trends and kind of how very wealthy people, how they invest. When I look at, Peter Lynch and some, Warren Buffett, some of these guys that have very good returns over long periods of time, what they did, at least what I think they did, is they identified the big trends. They bought things and then they never really sold. Warren Buffett is more focused and aligned to investing in things that don't really change with time. So he's really playing like a food product or a service or something that doesn't necessarily change quickly. Technology changes quickly, so you see him not really being too invested in that. I mean, he has a couple of things like Apple, but when you look at technology, usually you buy something and then it's gone. Like how can I say this? You buy something like an iPad, it lasts for 3 or 4 years, and then you won't buy another one for that time frame. He goes into things that can be scaled, like Coca-Cola. You can drink and consume that continually. And it's something that doesn't change over time. The ingredients don't change. It's really just ramping up the company. And that can be said for most food products, a lot of service products. It's just providing that service to a greater amount. It's not too hard. It's not a difficult, thing to I'll say ramp or scale. Technology companies, they obviously get recycled or cycled through much quicker. Their product life cycles are much shorter. So you can make a lot of money quickly, but a lot of the times they go bust, or they basically their products become worthless with time as new inventions and technologies come out and replace the old stuff. So one thing I wanted to talk about is identifying the big trend. And on the website, the platinum members and silver members and stuff, I'm putting out more content on the big trends, how I'm playing it, what are some problems with some of the big trends that could potentially happen, and how I'm positioned for if problems were to occur. And I'll touch on that a little bit on this in this video clip. What I'm going to talk about first is the big trend. And if you've been on the channel for a little while, that's kind of the thesis. The thesis is that inflation comes into the system, it impacts interest rates, and then money flows differently based off of the interest rates. And we can see that through ratios where the money is and isn't, how it's flowing between separate different assets. And we can see that through those ratios. And what I'm going to do is I'm going to kind of show you what the big trend is, at least in my opinion, what's coming. And I don't think anything is going to buck this trend. A recession's not going to stop it. The medical event in 2019, 2020 didn't stop it. This is something that I think is a force that is unstoppable until it is solved. It deals with energy, it deals with commodities, and those are the things that are the lifeblood of entire economies. So in order for an economy to grow, it's limited by how much energy it has to grow with, and the commodities that are feeding it. That is your choke points. And at some point, and I don't know if we can infinitely grow economies forever. The Earth is limited, and maybe we'd have to go somewhere else outside of the Earth. That is what a lot of people in business project, but I don't know if that's possible or not. But let's get into the big trends first. We'll get into it here, and I'll give you my opinion. So this is the CRB to S&P 500. I always go back to this clip, and when this is declining, going down, stocks are outperforming during this period, and money went into stocks and not into commodities. That has obviously changed. We were rewarded for this in 2020 when I created my YouTube channel. I created it in August of 2020 because I saw that this was bottoming or about to bottom and start turning back up. And I created a commodity channel. Well, it's really an investing channel, but it's been focused on commodities because that's where the value is. We've seen this thing turn, and commodities are where we want to be, and we want to be long commodities this entire cycle. What is coming ahead of us is in my opinion, the largest commodity super cycle that anyone's ever going to see in their life, um, at least anyone who's living. There's a large industrial revolution in the beginning of the 1900s, and it's progressed all the way in the 1900s, and it's been absolutely great. But when we progressed that industrial revolution back then, it was plentiful, a bunch of commodities, plentiful, a bunch of energy. And in the late 1800s, that's when we basically started using oil and all these other high energy density fuel sources. So our gathering of energy was absolutely insane. And we basically were in a massive surplus of energy. I think what's coming is a transition in energy. And I don't know if we can transition backwards to something that has less energy return on invested, which would be renewables. I don't know if that'll work or not. And I don't know if we have storage solutions. They're incredibly mineral intensive. But the big trend, I think, is in energy. And there's lots of investment that's going to be needed in energy. And I think that's probably one of the biggest opportunities in the markets today. And with the commodity bull market, energy usually does very well in this type of scenario. Not only will lower ore grades require more energy to extract, it's going to require different energy sources that are far more mineral intensive. It's kind of a double-edged sword there, as you want to build out your energy infrastructure. It requires far more minerals for it. So I think the big trend is commodities and energy. And we can see that in this ratio where the CRB index is starting to outperform stocks. Stocks, I think, will do incredibly poorly if we hit mineral shortages or if we hit energy shortages. You'll start to see things cracking and blowing up. So we've seen that in places over in Europe, places in Asia, where things are starting to crack, and we can see that through the pricing of minerals, the pricing of energy, the pricing of all these different things. You're starting to see some minerals start to break as well, like nickel, and it exploding higher, lumber exploding higher, just the markets all around just kind of going vertical. One of the things that I pulled up here that I wanted to go through, and so just to recap again, real quick, the big boys who make lots of money, they identify big trends, they identify them early, and they stay and invest the entire trend. People like Buffett, people like Peter Lynch, all the most wealthy people with the highest returns have all done this. So it's identifying trends. We've identified that commodities are outperforming stocks. That is a trend that is starting to begin. And I want to show you some things to monitor these trends and what could potentially be coming in the future. So here is the IEA. The current energy crisis is much bigger than the 1970s oil crunch. And what he's saying is the world faces a much bigger energy crisis than the one of the 1970s. Back in the 70s, the crisis was just about oil, and it was contained to just in America. What's coming is the world. The world, especially Europe, could face a summer of shortages of gasoline, fuel, and jet fuel. He says back then it was just about oil. Now we have an oil crisis, a gas crisis, and an electricity crisis simultaneously, said the head of international agency created after the 1970s shock of the Arab oil embargo. Now I want to read a couple of things here about this trend that I think is coming. It says, as countries switch to green energy, demand for copper, lithium, nickel, cobalt, and rare earth elements is soaring. But they are all vulnerable to price volatility and shortages, the agency warned in a report published on Wednesday. Because their supply chains are opaque, the quality of available deposits is declining, and mining companies face stricter environmental and social standards. In the past, mining companies have responded to higher demand by increasing their investment in new projects, but it takes on average 16 years from the discovery of a deposit for a mine to start production. According to the IEA, current supply and investment plans are geared to gradual, insufficient action on climate change, it warned. They say the average electric car requires 6 times more minerals than a conventional car, according to the IEA. Lithium, nickel, cobalt, manganese, and graphite are crucial to batteries. Electricity networks need huge amounts of copper and aluminum, while rare earth elements are used in the magnets needed to make wind turbines work. Meeting the goals of the Paris Climate Agreement will require a significant increase in clean energy, according to the IEA, which estimates that the annual installation of wind turbines would need to grow threefold by 2040, and electric car sales would need to expand 25 times over the same period. Reaching net zero emissions by 2050 will require even more investment. The data shows a looming mismatch between the world's strengthened climate ambitions and the availability of critical minerals that are essential to realizing those ambitions. The challenges are not insurmountable, but governments must give clear signals about how they plan to turn their climate pledges into action. So, and what I put around here are some of the market balances of some of these minerals. The lithium market balance is here, and you can kind of see that it goes into a large deficit where the yellow is the actual operational supply. These are probable and highly probable additions that are coming up. And things get a little funky, I would say, when this line starts to create a gap between somewhere in this range in the mid 2020s, late 2020s, and then a massive problem afterwards, which means we don't have identified projects in the pipeline to support the growth of a lithium market balance like they want it to be. The same can be said of aluminum. Out of aluminum, Trifigura says global inventories will be exhausted by early 2024. So we start to go into a deficit in 2024 of aluminum. Copper is very similar. Comes up in the future here, and we start getting deficits for copper. We come up here. This one here is, if I can remember, it's another mineral, cobalt. No, cobalt is this one. Cobalt's here, coming on up. Again, we've got another problem with cobalt in the mid-2020s. And then this one was nickel sulfide. This was nickel. And this is the problem we see with nickel. We were basically in a balanced market. Then we start to go massively into deficit. And I'm just looking at all these things, and I'm trying to figure out, there's a lot of problems ahead of us that are going to stop us from implementing this huge energy transition. But on the other hand, we've basically cut investment to the things that we know that work in fossil fuels, which is oil specifically, and coal. Those are ones that we've drastically cut back. They're starting to cut back on nuclear. Now, if you kind of just tie this all together, the big trend in energy, this energy transition, my question is, if we can't implement all of this stuff because of the shortages in the minerals themselves, what's the likelihood that we're going to have to ramp up existing fossil fuel consumption? And are we seeing evidence in today's markets that are showing us that? Renewables, wherever we've implemented the most renewables, we've had the largest cost increases in electricity for the most part. California, Germany, lots of other parts in Europe. The transition is going poorly. The efficiency of renewables is far too low, I think, for them to replace fossil fuels, and we don't have any good way to store electricity at this time. So we're kind of in a conundrum right now because no one's investing. A lot less investments going into the existing infrastructure and existing fossil fuels. We're trying to ramp up this stuff that isn't necessarily working. Wherever we've implemented it the most, we've had the worst outcomes. So I'm just trying to think, what is the big trend that's coming up in energy, and how can we invest in it? And obviously, if you're part of the website, you can see that. And if you're part of this channel, you can see kind of how we're positioning. We're looking at companies in oil, natural gas, energy service sectors, nuclear, which is small modular reactors, uranium. We've got shipping, because if you've noticed, again, that the solutions are 6 times more mineral intensive, which means we have to ship around far more minerals. If we're shipping around far more minerals and we don't have the ships to do it, we're going to get a squeeze in shipping. There's a lot of problems and issues and opportunities that are coming up with this transition. And I don't think it's going to be very smooth. I think we're going to have to ramp up way more fossil fuels than what people think in order for this transition to even happen, if it were to even happen, and even if it were to be successful. So I think that the big trend, the biggest trend that I can think of, because here's the problem. If we're not successful with this transition, if we're not successful with ramping up current fossil fuels, we're going to have a huge energy crisis, which we're already entering. The energy crisis impacts everything that's non-energy related. So it's kind of almost like you want to be in energy and not be in anything else. Or you want to be in the things that are going to solve the energy crisis, shipping all this material around to solve the energy crisis, or things that are directly related to solving the energy crisis, whether it be oil, coal, natural gas, and any of the minerals that are associated with it. Then you're going to have to look at, well, what are the most profitable things in an energy-starved world? If we were to get into a situation that could be potentially, we'll call it a squeeze in energy. You probably don't want to be in miners, because mining companies play the margin game, which is your input costs versus whatever the base metal cost is. And I don't know if I want to play that game. So what I've been doing is I've been playing the physical metals game in precious metals, because precious metals are, one, used in some of this, silver is, and so is platinum and hydrogen. So those are related to the energy solutions, and they're also precious metals, which have it's tied to currency, monetary type things as well. And we could have problems with energy, an energy crisis could put problems in the financial markets, which is another big trend, if you think of it, because the big trend is obviously energy. If you have too big of a crisis in energy where we choke the GDP and your debt has to continually grow, you're going to get inflationary problems. If it gets too out of balance and we can't grow the energy, I think we're going to see higher rates of inflation, pretty high rates. And to be in something like a precious metal where you have monetary protection and it's solving the energy crisis, I think is ingenious to go into. It's also the lowest risk way to play it if you're playing it with physical metals. So I think that's all, it's all positive. And you can also play it with royalty companies where your input costs are taken away and you have volume and price that is going to price these royalty companies, their streams of income. So I think that's also a very smart way to play it. So my total portfolio, if you were to look at it, is playing the big trend of energy and the crisis that is potentially here or is coming quite rapidly. And all I'm going to do is buy these things and sit in them, because none of this stuff is going to be solved anytime soon. You can see the deficits out there in the future of all these different minerals. They go crazy in the mid-2020s. So the way that I'm playing it, well, buy as much physical as I can when they're extracting these things out of the ground with the cheapest energy sources. Remember, assets get priced differently given certain market conditions. And the market conditions today, most people don't see this. They don't even know about it. What I'm presenting here. They don't know yet. They don't know how bad it is. But when they figure this out, money's going to rotate vastly different. You're going to see a massive commodity bull market boom. The whole thing is to position early, find out what the big trend is, which I'm going over here, positioning for it, and then waiting for everyone else to figure it out. That is really what investing is. It's front-running money flows. And what's going to happen, I think, is they're going to try to ramp renewables. They're going to figure out it doesn't work. What do you think is going to work? It's probably going to be nuclear if they want to ramp that up. High energy return, it's plentiful, and we have the technology and we have power plants with existing minerals in place that could be restarted. It's just about positioning and just waiting. It's not about getting nervous. It's not about fearing a recession that's going to happen, no matter what, because we're going to have to destroy that side in order for this to get the money it needs. Another thing that's really complex about this is I just showed you a whole bunch of different minerals that have problems. I've showed you a whole bunch of different energy sources that doesn't have the required investments. We are facing an oil crisis, a natural gas crisis, an electricity crisis, a copper crisis, an aluminum crisis, a cobalt crisis, a lithium crisis. I go on and on and on and on. I don't know how easily this is going to be solved. I don't think humans have faced a crisis in this many things that have spread across so many different elements. In the book, Limits to Growth, they said that we can handle maybe one or two in one time, but I don't know how successful we are going to handle 10 or 20 of these things all at one time. Because it's starting to branch out and have tertiary effects. Those effects of energy are going to touch everything. And there's effects out there that I don't maybe understand the entirety of. For instance, we would have problems in smelting zinc, smelting aluminum, because the energy cost is quite dramatic in those. Then you're going to have fertilizer problems. You're going to have problems that are just going to start blowing out all over. We're going to have a food crisis or other crises that I can't even think of off the top of my head, and it's going to impact everything. Yes, we can solve things. We can become more efficient. We can drive less. We can do all sorts of things to mitigate a lot of these problems. But they all hit in the mid 2020s. So I'm positioning now, and I'm not worrying about what my investments are doing, right in front of me. This is positioning for the big trend and the big game that's coming. So that's kind of how I'm looking at this. And if you guys are interested in how to, what investments to take, what particular individual stocks you want to invest in, subscribe to the channel. Number one, give me a thumb up too for this content. And subscribe to the website. Become a platinum member. I go over a bunch of different ways to play this, royalty companies, mining companies, and maybe some companies that are building some of the solutions like small modular reactors in nuclear, energy service companies, because money hasn't necessarily flown there yet, and shipping companies and all that. And it's not about having your portfolio go up and down in the next few months. I know that sounds great, but this is coming, and it's coming soon. And it's about positioning for what the big trend is, and that's where the big money's made. All right, guys, we'll catch you next time. This is Finding Value.